Alright y'all, today I am going to walk you through step by step the Market Cipher strategy that I used to short this top right here and long this bottom right here. Now it's been a crazy day for those of you who are watching this in the future and not today. Elon Musk last night is being blamed for tweeting the price of Bitcoin down from 39,200 all the way to 35,600. Now, personally, I don't think Elon Musk was the one who moved the market. I think that there were indications on the chart that were showing us that we needed to come down. And so today I want to show you how I was able to use the Market Cipher indicator to literally short the top and long the bottom. And just to prove to you guys that I did take these trades, over here in my Discord, I have a screenshot from yesterday at 7:50 p.m. Eastern New York City time. This is before Elon Musk tweeted. I posted in the chat, hey guys, I'm going short right here. 39,164 was my entry. 39,164 was my entry. This is still the trade right here, posted here. Okay, so 39,164. So that means I entered right 39,164, literally right here where my cursor is right now, right about this white line. And then this morning, when we were down here, I posted that I am going long because I got my Market Cipher indications right here. And my entry was 35773. 35773. Right here. 35773. And if we come to the chart again and we take a look, where's 35773? 773 is right about here, okay? Right about here. So I was able to short this and long this using the Market Cipher indicator. Now, Market Cipher is a very powerful tool, but you have to know how to use it. You have to know how to use it, because when you first open this thing up, it can be very overwhelming. You don't know what you're looking at. You got dots, you got waves, you got lines, you got money flow, you got RSIs, you got Market Cipher A, you got Market Cipher DBSI. What you need to do is you need to have a strategy, a very clear-cut blueprint that you can use in order to enter trades. Otherwise, you're going to be flopping and groping, right? You need to have a very clear, systematic approach to this if you want to be profitable. So today, I want to show you the systematic approach that I use to find these good trade entries using Market Cipher. And this is the order of operations, okay? First, we need to make sure that we have levels on our chart of support and resistance, and there's many ways to do this. CryptoFace uses spider lines. We see him doing that on his live stream. He has his spider lines. He uses those in conjunction with Market Cipher B and to find entries, right? We've seen Flopping Groper use Market Cipher SR. Okay, personally, I like to draw my levels of support and resistance using volume, Fibonacci, daily and weekly levels, etc. Okay, so the first thing you need to do is you need to have your chart marked up with proper structure. Now, this looks pretty messy when we zoom out, right? I understand everything that's on this chart because I actually marked it up myself. This is my chart that I used to trade. But basically, what you need to do is you need to have areas on the chart where you are not even thinking about entering a trade unless price comes to one of those levels. These levels are going to be your reference point, your point of orientation, from which you can actually enter and exit trades. If we take all this off the chart, we're just lost in the dark and there's just candles on a chart and we have no reference point from which to enter a trade. If we have the levels on the chart, then we have reference points from which we can enter the trades. If you look at all the trades I took yesterday, okay, these are all trades I took yesterday. I shorted because we came to a level. I shorted because we came to a level. I longed because we came to a level. I shorted because we came to a level. I longed because we came to a level. I shorted because we came to a level. Right? That's just how it is. Okay, that's how I trade. That's how I use Market Cipher. Now, I'm not just entering trades because we come to a level. I'm using Market Cipher to find confirmations that the price is going to go in the way that I want. Now, if you don't know how to mark up your chart with these levels, there's two things I recommend. Number one, you can go to my YouTube channel. I have lots of free content on there showing you how to mark these levels of support and resistance. But if you want a very in-depth systematic approach teaching you how to use Fibonacci, how to use volume, how to get accurate levels, check out jasoncaspertrading.com. This course will give you the confidence and the skills you need to become a profitable trader. And you can go ahead, read the testimonials. Of course, none of this is financial advice, but this is literally changing the way people trade, because it's giving you a step-by-step systematic approach to it, so that you're not just getting the information in the wrong order and learning by losing money, okay? This will walk you through everything as if you're a brand new trader, and we go through technical analysis, time frames, trends, support and resistance, volume, Fibonacci, moving averages, using confluence. We talk about how to use Market Cipher. We go over how to enter a trade, how to set your stop loss, how to take profit, how to manage an open trade. We even give you strategies that you can use right out of the box to start winning trades. We go over risk management, mindset, pretty much everything. Check it out. There's a 10% discount in the description of this video, and also there is a 5% Market Cipher discount in the description of this video if you do not have Market Cipher. So, okay, that's step one. We're going to have our levels marked out on the chart. Step number two is this. Once we have our levels marked out in the chart, we need to go to Market Cipher B, and we're going to look at the medium-term higher time frame. So I'm talking about the 4-hour, the 2-hour, and the 1-hour. And we're going to look for signs on these higher time frames of the overall direction of the price, okay? We're talking about not little movements, right? We're looking on the 4-hour, the 2-hour, the 1-hour. We want to see which way is the price going to swing in general, okay? Now, as we're going through these steps, it's very important that we interpret the information we see in step 2 through the information we have in step 1. And it's very important that we interpret the information that we see in step 3 through the lenses of what we've already gathered in steps 1 and 2. This is the order of operations. If you do it in any other order, it won't work. So here's how it works. We're going to wait for price to come to one of our levels, right? The way I do that is after I mark my levels on the chart, I will set an alert on it like this, add alert, okay? I can't do it in replay mode, but then when price comes to the level and I get the alert, then I'm going to go ahead and I'm going to look at the chart and look to see if I have a price entry. Now, it's very important that if we come to a resistance, okay, we're going to look for a short trade. And if we come to a support, we're going to look for a long trade. Most of the time, 90% of the time, I would say, maybe not 90, 85% of the time, longing support and shorting resistance is going to result in much more profitability over time than trying to long resistance and short support, okay? Unless you're crypto face, I've never seen somebody do that over time and be successful. In fact, most of the time, I see people trying to long resistances like this right here, this candle right here, long it right here as we're breaking through the resistance and price falls right back through. Instead, what I did when price got to that resistance was I shorted it. I shorted it and got a nice little move down, okay? And then when we came back to the support down here at the trend line, I longed it back up. So, you know, when price comes to a level, you want to look to long supports and short resistances. So price is coming to a resistance, step number 1. So right off the bat, our bias is we're looking for a short, okay? We're looking for a short. So then we go to step 2, and through the lenses of we're at a resistance and we're looking for a short, we're going to take a look at Market Cipher B on the 4-hour, the 2-hour, and the 1-hour. Those are the time frames I like to use. You don't have to stick to those, but what we're going to do is we're going to identify the environment in which we're looking to enter a trade. So we come over to Market Cipher on the 4-hour, and what's the first thing that we see? Well, we have a red dot printing on the 4-hour time frame on Market Cipher B. Wow. That means momentum is coming down, okay? So we're at a resistance, and we're printing a red dot on Market Cipher B. Let's go back in the past and look at what happens every time we come to a resistance and we're getting a red dot on Market Cipher B. Okay, the last time that happened was right here. We come actually to the same exact resistance, and we're getting a red dot on Market Cipher B, and the price comes down. Or right here, we come up to the resistance of the trend line, and what happens? We print the red dot, price comes down. Right here, we're up to this same resistance line. You know, we get the red dot, price comes down. Up here, we didn't really know this was a resistance yet, but in hindsight, we can see we came to the resistance with the red dot, and price came down. So we can kind of assume safely, again, right? We're taking this information in order. We come to a resistance, looking for a short. We're printing a red dot on Market Cipher B. Usually means price needs to come down a little bit, okay? So we're stacking in our head the probabilities of the price coming down versus the probabilities of the price continuing to go up. So far there's two things showing us price is going to come down here. Red dot, Market Cipher B on the 4-hour, coming to a resistance. Now we go down to the 3-hour. What do we see? Well, we still have the red dot in the 3-hour, but things are looking kind of bullish. If we come to the 2-hour, we're printing a green dot on the 2-hour. Okay, money flow is getting thicker. Okay, this is pretty bullish looking. Okay, this is bullish looking. So we need to now take all this info in our heads and say, okay, we're at a resistance, which means we're looking to come down. The 4-hour time frame is showing us that we do need to come down, right? Then the 2-hour and the 1-hour are looking a little bullish. Okay, so we're a little bit inconclusive. We have two things telling us we're coming down, and two things telling us we might go up a little more. This is where we need to go down to the lower time frames and really zoom in to see what is happening. So if we come down to, let's say, the 24-minute time frame, what can we see here? Can we see anything that's telling us that we need to come down? Well, the first thing that's extremely blatant to me is the fact that we are getting a bearish divergence, okay? This is something that's extremely important to look for. When we're looking at the lower time frames after we analyze the 4-hour, the 2-hour, and the 1-hour, we're taking all the information we gathered from step 1 and step 2, and we're going to keep this in the back of our minds as we look at the lower time frames, okay? It says 1 to 12 minute. I would even say the 1 to 24 minute, okay? The things we're going to be looking for on these lower time frames are divergences in momentum and divergences in money flow, okay? Divergences in momentum and divergences in money flow. Let me explain what I mean by divergences in momentum and money flow. A divergence in momentum is where the price is printing higher highs and higher lows over time, while at the same time, the momentum waves on Market Cipher B are printing lower highs. Lower highs, okay? Check it out. Price is printing higher highs in general. We have a high here. We have a higher high here. We have a higher high here. And, right now we can't tell what's going to happen, but while price is printing higher highs over time, the momentum is coming down. We have a high, and then we have a lower high, and then we have a lower high, and then we have a lower high, and then it looks like we're even about to print a lower high. This is called a divergence, okay? A divergence means the price and the momentum are doing the opposite. They're diverging away from each other. And not only do we have a divergence with the price and the momentum waves, but we also have a divergence with the price and the money flow, right? We can see here that the money flow is actually, if we draw the trend line on it, this is not a parallel line here. This trend line is sloping down. There's money leaving Bitcoin. There's money leaving Bitcoin as the price continues to rise. Now let's just think about this. If people are taking money out of an asset, yet the asset keeps trading at a higher and higher price, what does that mean? It means there's an imbalance. There's an imbalance, and there needs to be a correction so that it becomes trading at a fair price again. So at the 24-minute, we can see this divergence starting to form here, okay? So again, we're interpreting this through the lens of the first few steps that we saw, right? We're at a resistance. Already we're biased toward a short. The 4-hour is giving us a red dot. Already we're biased toward a short. The 1-hour, even though it has the green dot printing on the 1-hour, we can even see this divergence on the 1-hour, right? We see the divergence on the 1-hour. We could draw a clear line to this point, to this point, this point, to that point, and see momentum is coming down. It's coming down. Now we're going to really go down to the low time frames. Let's go to the 3-minute even, okay? The 3-minute time frame. And what do we see here? Let's even go to the 1-minute. The 1-minute time frame. What do we see on the 1-minute time frame? On the 1-minute time frame, okay, this is usually the time frame I use to enter. You can see extremely clearly that we are printing higher highs, okay, in the last, from 17 o'clock all the way to 19, almost 20 o'clock, okay? So 3 hours, we are making higher highs on the 1-minute, and for 3 hours, we are printing lower highs on the momentum waves, okay? Not only that, but we can clearly see on the 1-minute the money flow getting lower, okay? We can draw a trend line from the money flow here and just watch this thing dip down. As the price comes up, like this, okay, over time, price is coming up, we can see that the money is literally leaving Bitcoin. Okay, money is leaving Bitcoin as we're getting these divergences. We have two divergences, right? We have one with the money flow starting way back here, and then we have one just with the momentum starting right here. And so this is telling us, look, we are going to come down. We are going to come down. And for me, my entry is when the money flow curves from the blue into the purple. Okay, curves from the blue into the purple. So, you know, what I like to do is I like to wait for price to come above the resistance, and then once we lose that resistance, right, once we lose it, that's where I enter. That's where I enter. So I set the short position right here. I put the stop loss above the last swing high, and I set my take profits on the way down. And let's see here. Then we just we come down, right? We come down. We just keep on coming down, keep on coming down. And so that's how we enter trades, right? And then let's talk about how we entered the long at the bottom, okay? Now, there's, like I said, there's a lot of things we do to get those support and resistance lines on the chart. Okay, there's a lot of things we do to get those support and resistance lines on the chart, and one of the things that I use is Fibonacci. Okay, and again, if you want to learn this stuff, check out the course because I do think it's very helpful. But what we can do is we can pull out our Fibonacci tool, and we can take it from, you know, the swing low to the swing high. Pull it from here. No, that's not where I pulled it from, actually. I must have pulled it from this swing low right here to this swing high right here. Okay? Now, again, if you want to learn more about Fibonacci, you can check out the course. But here's what's going on right here. Fibonacci is showing us, you know, where we're probably going to get a bounce from. Okay? The Fibonacci numbers, real quickly, if you don't know what they are, I'm putting them all on for us here. Basically, price is never just going to move up. It's never just going to move straight up and straight down. It's going to move up a little and retrace, up a little and retrace. And what the Fibonacci tool does is it helps us to find those bounces. When we retrace, it helps us find the end of the retracement so that we can catch the bounce and get to the move on the upside. And this works on the way up, and it also works on the way down, right? So if we want to find where we're going to bounce from, we pull our Fibonacci from the swing low to the swing high, and it gives us levels where we're probably going to bounce from. So I pulled it from this low right here to this high right here, and it's showing me where are some of the areas I should look for a bounce. The most powerful area that you're going to bounce from is this area right here between the 618 level and the 0.65 level. This is called the golden pocket, the golden ratio. I'm sure you've heard of this before if you spent any time watching YouTube TA videos, right? This is the most probable place that you're going to find a bounce. And if you are in a downtrend and you want to find you know, where the price is going to continue down, then what you would do is you would pull your fib from the swing high to the swing low, and this will give you targets to look for a continuation downwards. So it works both ways. You can use fibs for support and you can use fibs for resistance. And basically what I did was I pulled the fib from the swing low to the swing high, and it showed me that, you know, this golden pocket right here was, you know, I had an alert set here. I literally had an alert set saying when price comes down to the golden pocket, look for a long entry. Look for a long entry. So when price got down to here, I had an alert go off. What did I see? What did I see when price got down to here? Well, let's zoom in. Let's start at the 4-hour time frame. Let's go back in time. Let's see what we would have seen here, okay? Now, I guess we need to do this maybe on the 2-hour time frame because this was after we already got the bounce, right? That was after we already got the bounce. So let's go maybe get to the one. Sorry guys, I trip over my words here. Okay, I trip over my words. I'm trying to find a time frame where we are right at the low. So let's use the half-hour time frame. All right, we'll use the half-hour time frame. We'll come down here. What were we looking at the half-hour time frame? What were we looking at? Okay, so we'll start with the 4-hour. Remember, we're going through our order of operations. First, Has price come to a support or resistance level? Yes, it came to a support. So we're going to look to long the support. That's step one. We came down to a support, a very clear Fibonacci level support that we had marked on our chart. We had the, let's see here, this red line right here, this red line was the line that I had an alert set on, so I knew price was about to come down into the golden pocket. And basically what I did was I waited for price to come into the golden pocket. When price came out of the golden pocket, I caught that long on the way up. And here's what I saw in Market Cipher that made me want to enter that trade. So the 4 hour is looking like, first of all, we're about to bottom out. The WAP, the old VWAP, is curving to the upside, okay? It's no longer pointing down. It's not even horizontal. It's pointing to the upside. So that's telling me we're about to get some kind of a move to the upside, okay? On the, hey, wait just 1 second, guys. I thought that, oh, I know why. Okay, so, yeah, because it's through different time frames. But this is pretty much how it looked when I saw it, okay? Let me see if I can, is that a screenshot? What time frame is this? This is the 1 minute. Okay. Well, I guess I can't really show you guys exactly what I saw, but it was very similar to this, okay? It was very similar to this. Now, money flow is curving down on the 4 hour, but we need to understand we're trying to catch a bounce, right? We're trying to catch a bounce. We know, first of all, support, golden ratio, high probability of a bounce. 4 hour, VWAP pointing up, red dot printed a long time ago. We just dumped a lot. We're primed for a bounce. We come down to the 2 hour. What do we see? 2 hour about to print a bottom. 2 hour is about to print a green dot, okay? So again, 2 hour, we know we're at a support. We know we're looking for a long. The 4 hour looks like it's going to bottom out. The 2 hour looks like it's about to bottom out as well. We come to the 1 hour. The 1 hour is just recently printing a green dot, okay? Just recently printing a green dot. That usually means we got some bull power to come up. Okay, then what we do is we go down to the lower time frames. Okay, so we've done step one, we've done step two. Step one says we're at a support, look for a long. Step two says the higher time frames are bottoming out. It looks like we're about to hit the bottom. Now we go to step three, those lower time frames, the 1 to 24 minute. What do we see on those lower time frames? Well, let's start with the 24 minute. What do we see on the 24 minute? Well, the first thing that we see that should really stick out to us is the fact that we clearly, but before this big blue candle formed, when we were way down here, you see this pointiness down here, this pointy wave right here? To me, that's showing that we're forming, okay, it hasn't confirmed yet, but we're forming a massive bullish divergence. Momentum is coming up, and price is coming down. So now let's go down to a lower time frame. Maybe let's now go down to the 12-minute time frame and see what we can see on the 12-minute time frame. Well, honestly, on the 12-minute time frame, I see the same exact thing. I see momentum coming up while price is coming down. Let's go to the 6 minute. What do we see on the 6 minute? Sometimes you want to zoom out and see what you can see. Now on the 6 minute, okay, on the 6 minute, remember, this was at this time. Let me close this out so that we can see exactly what I was seeing. At this exact time, right here, boom. I could see clearly the bullish divergence. The price was coming down like this. The momentum was coming up like this, okay? And not only was the momentum coming up like that, but we could also clearly see the money starting to come back into Bitcoin, right? We see the money flow curving back up on these lower time frames. So here's what we have. We're at a support. Look for a long. The higher time frames, we're about to print a bottom. The lower time frames, bullish divergences. As we get lower on the time frames, we actually start to see the money coming back into Bitcoin, right? Look at this on the 3 minute time frame. We can take a trend line from here and watch the money flow coming back into Bitcoin, right? Every time the purple waves come, the purple waves get shorter and shorter at the same time as the price keeps getting lower and lower, right? The price is getting lower and lower and lower. The money coming into Bitcoin keeps getting higher and higher and higher. Because remember, the money flow, crypto face likens it to water in a garden. When the money is coming, when the water is coming into a garden, things are going to grow. When the money is coming into Bitcoin, the price is going to go up. When the money is leaving Bitcoin, the price is going to go down. We can see the opposite being true right? As we can draw a trend line on the money flow leaving Bitcoin, okay, leaving Bitcoin like we did when we shorted. When we shorted this, remember, we watched the money flow leave Bitcoin and we shorted down. And then when we come to the bottom, we watch the money coming back into Bitcoin, and then we long, okay? That's what we're going to be looking for. And so, yeah, then we come to the 1 minute time frame, and on the 1 minute time frame also, we can see these things more. We have to zoom out a little bit because, you know, it's showing us the same thing in different resolution. But we still see on the 1 minute time frame, we've got the money coming in to Bitcoin, right? As the price comes down, lower and lower. And so you had a lot of opportunities to long this, but actually you didn't really, because we got a very fast chicken drinking water bounce, okay? A chicken drinking water bounce. If anybody's not familiar with what a chicken drinking water bounce is, well, here, let me show you. I have to show you. This is a great way to catch bounces, okay? Chicken drinking water. Okay, chicken drinking water. Let's check it out here. So, where's our chickens drinking water? Here they are. Watch the way the chicken drinks water, okay? Watch the chicken's head. The chicken is going to dip his head in real quick, dunk it down, and then pull it right back up and lap the water up. Doop, 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 doop. Okay? The chicken, right here, this red chicken, dumps his head in, comes it up, lap, 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 lap. Okay? It's the same with the price. That's what we want to look for when we are looking to long after a dump. When we see the divergences forming, and when we see, this is very important, when we see that the divergences are forming, and hang on, this is not the right place. Here it is. When we see the divergences forming, and we see price coming down to a support, and it dips below the support. Now, this green line right here is our support, okay? This is the 618 golden ratio right here, okay? Price dips down, okay? And when we see price come below a support, and then real quick come back up, boom, like that, boom, like that, okay? Real quick. It's just like the chicken drinking water. Chicken sticks its head in and then lifts it up and laps up the water. When we see it come below support and then a real quick buyback of that, right? Real quick buying back of that of the price after it dips below the support. That's a sign that we are indeed getting the bounce. It has to be fast like that, but it has to be in conjunction with the divergences, and we see them very clearly. We see the divergences very clearly forming on the chart, okay? The 12 minute, I mean, it's just so clear, right? The 24 minute is just so clear. We see as price is coming down, the momentum is coming up. We can see the money flow coming back into Bitcoin. Then on the 1 minute, we see the chicken drinking water drops down, laps back up real quick. Like, look at that reaction off of it. And that's how you can catch those bottoms. So you can catch the bottoms. And if you wanted more confirmation here, we come up, we print a higher low. Anyway, that's how I use Market Cipher to catch the bottoms and the tops. It's a very good indicator. There we go. It's a very good indicator. And of course, the strategy I'm showing you here, it does take some time and practice. It takes some back testing. And look at this too, guys. I want to show you something else, okay? Look at this. This is something else that we could have done as well. We could have shorted right here because we also had another divergence. Price is coming up. Momentum is coming down. Money flow is coming down. We could have shorted right here as well and gotten a nice short out of that too. I missed that short, unfortunately. In hindsight, I saw it, but I was busy doing something else. But, we could have really shorted that as well and gotten a nice little move from it. A nice little scalp short from there. Okay? So it's really all about, just having your levels marked. Why would we short that? Because we had a level marked right here. This was a Fibonacci level. We got the divergence, okay? And boom, we get a little scalp short out of that. And so that's pretty much it, guys. That's pretty much it. So, did Elon Musk manipulate the market? Maybe he did. But we saw this coming. We saw it coming before it happened. And yeah, if you guys don't have Market Cipher, you can click the link in the description of the video, get a 5% discount. Also helps me out, right? Because I am affiliated. I do get commission from them. And also, if you want to learn all this stuff in detail, check out jasoncaspertrading.com. Sign up for the course. Join the free Discord. If you have questions, hit me up in there. And of course, guys, if you like this kind of content, make sure to like the video, subscribe to the channel, and all the stuff I'm supposed to say. Well, I don't even know what kind of accent I'm talking with right here. Alright, so make sure to like the video, make sure to subscribe to the channel, and I'll talk to you soon in the next video. Alright, goodbye.